The lithium cycle has turned. Prices have taken off during 2021, and as the impact of cleantech's exponential growth becomes clearer, demand estimates continue to be upgraded. More than 3,000 gigawatts of lithium-ion batteries are expected to be produced in 2027, while annual EV sales will breach 20 million units for the first time. With large extraction projects taking 5, 7 or even more years to on-stream, a long-term undersupply of lithium seems certain. A decade ago, profiting from this would have been entirely straightforward. Investors would have bought a simple basket of stocks, weighted according to their own analysis. Yet the smart money is now studying each lithium company in far more granular detail, seeking to navigate a multidimensional minefield of rapidly evolving battery tech, greenhouse emissions, waste management, overuse of water and the integration of the up and downstream, as well as security of supply and startups that make big claims but have uncertain horizons and early stage technologies. Lepidico, in contrast, appears to exist largely outside this complex landscape, a near singular alternative to a hedged basket of investments. So, MD Joe Walsh has joined us in the studio to discover why some investors consider Lepidico a one-stock alternative to a complex basket of lithium stocks. Hi, Joe.
Good morning, Michelle.
So, Joe, why is Lepidico different from other lithium stocks?
So we're differentiated on many levels. So firstly, we have now completed a definitive feasibility study on our first project. It's taken us 8 years to get to this point. We are using proprietary process technologies which we've developed in-house that allow us to produce lithium chemicals and other high-value chemicals of cesium and rubidium from non-traditional mineral sources of lithium, the lithium mica and lithium phosphate minerals. And these are hydrometallurgical processes, so they aren't that energy intensive. They don't require the high temperature processing that spodumene, for example, needs. So we're lower cost, we're more environmentally friendly from a greenhouse gas emission perspective. So Lepidico and its technologies allow the best of both worlds, from hard rock sources versus brines.
Great. So can you tell us more then about the benefits that your lithium processing technologies offer?
Yes, Michelle. So the first process is the LMAX process, which allows us to treat the lithium mica minerals. We produce cesium and rubidium sulfate as well. Both of those are on the US State Department's list of 35 critical minerals. Importantly, they're a subset of 14, which the United States is 100% reliant on imports of. Furthermore, they're a subset of just 3, where those markets are actually dominated by Chinese interests. We are bringing a new source of these chemicals to market, and that the cesium rubidium market in particular is going to be looking for new material over the course of the next few years. It's going to be heavily in deficit. The lithium market also is seeing exponential growth given the demand for predominantly electric vehicles. Our technologies allow us to produce either lithium carbonate or lithium hydroxide. And what we're seeing is auto manufacturers now are looking at alternative technologies and they're not 100% sure what chemical they might need in the future. We address that concern by being able to fairly easily change between producing lithium hydroxide or lithium carbonate.
That's all really good to know. Given it's currently a micro-cap stock, could you help us understand why you think the company has the potential to become a titan in the lithium business?
It's a great question. So we're in the right place at the right time, Michelle. We've spent 8 years now developing these technologies. We have also successfully piloted the technology. So we've been mitigating risk all the way through those exercises, and we're now pretty much ready to go. We're working on our first offtake arrangements, which we expect to come through in the second half of this year. And we're well advanced with debt financing initiatives. And we entered into a mandate agreement with the US government's International Development Finance Corporation in October last year. And I think that that's a fantastic endorsement of our environmental and social credentials and also the unique elements of this project. The business is also a scalable business. Our first project we're looking at is around 5,000 tonnes a year. We're already working on a phase 2 project and developing our resource base to be able to support that. And a phase 2 project will probably be 3-4 times larger, say around 20,000 tonnes a year. The other aspect to our business is we have the ability to license our technologies. And late last year, we entered into our first licensing arrangement with a British company who will be using these technologies for lithium mica deposits in the southwest of England. So the business model here is to develop an operating business, but also in the fullness of time have a royalty business via third parties who are using our technologies. So when you package all of this together, we provide really a low-risk, diverse business model for investors that want exposure to the energy transition thematic. And it's a very complex landscape out there. Lepidico addresses that.
Superb. Thanks so much, Joe, for coming in. And I'm afraid that's all we have time for. But if you'd like to find out more about Lepidico, visit the Edison website. Just click the link at the end. Thanks for watching.